In today's video, we're going to talk about the Dow Jones Industrial Average ETF and why I think that you should consider adding this to your portfolio. Now, I already know what my dividend lovers are going to say. I already own SEHD, or I own DVY, or I own the Vanguard High Dividend Yield. But just take a second, listen to the video, and I think you're going to learn some good stuff. When you own something like the Dow Jones, look at 2012 over the last 10 years. Your $10,000 investment turned into over 30K. That's a nice return. When you invest in the Dow Jones, you are looking at a proven track record. Look at the lifespan. You are making a return of 8.25%. Some years you get 11%, some years you get 12%, but overall we get nice 8% guaranteed. That is huge over a long track record. And hey, I get it. You can invest in stocks like AT&T and say, oh, I'm getting a 7% dividend. But you could also be falling into this trap where it used to be $30 and now it's half the price and you're getting that 7% dividend, but you're also down 54% on your investment. I'm looking for ETFs that show consistent profitability and give me that dividend that I want. To those that are new to this ETF, ticker symbol DIA is the Spider Dow Jones Industrial Average ETF Trust. What this does is it tracks the Dow Jones Industrial Average, which is normally known as DJIA. This is passively managed and has a large value for its style. What makes DIA so unique is that it only consists of 31 companies. And look at the top 10. 56% of this ETF is in these 10 companies, starting with United Health Group at 9%, Home Depot at 6%, Microsoft 6%, and the list goes on and on. As you can see, you have names that we're all familiar with McDonald's, Caterpillar, Amgen, Visa, Boeing, and Salesforce. This market capitalization accounts for 48% giant and large 47%. This gives you a nice blended large growth in all of the assets of DIA. And here's the sector breakdown for this. Financials at 19%, healthcare at 19%, information technology at 18%, tracking ticker symbol DIA from 2001 over 20-year span, it was at $55. Just holding this stock for 20 years, we had some ups and downs from 110 all the way back down to 50 during the 2008 crash, and it worked its way all the way up to $350 a share. Look at those gains by just dollar cost averaging into DIA. This is the kind of ETF I want, something that's resilient, and over the long term, we have a nice, stable rise. Honing in on DIA, we can see the portfolio exposure of the 31 companies. Now we listed the top 10, but let's go through the other ones. So you have Apple at 3%, you have Walmart, Johnson & Johnson, Chevron, Travelers, American Express, Procter & Gamble. All of these companies are big companies that have been around forever. Nike, Walt Disney, Coca-Cola, Cisco, Intel, Verizon, Walgreens. So you have 31 top dogs that you're investing in for the long term. So let's take a look at DIA, the Dow Jones, and let's compare it to the S&P 500. So using the Fidelity platform, we're going to type in FXAIX, which is the S&P 500, and we're going to see a little bit of differences and some similarities. Ticker symbol FXAIX focuses on information technology at 28% and healthcare at 13%, financials at 12%. I want you to look at DIA one more time just to see how different the portfolio weight is. Ticker symbol DIA, the Dow Jones Industrial Average, has a more heavy focus on financials at 19.72%, healthcare at 19%, technology only at 18%. So there's a drastic difference in the sector exposure, which gives you a nice diversification if you hold S&P 500 and the Dow Jones as well. Comparing DIA to the S&P 500 FXAIX, you can see that DIA is given a 323% return since inception, whereas the S&P 500 is given a 500% return. So this shows you that over time, the S&P 500 has beaten DIA. But I think it's important to always have diversification in your portfolio where you have different weighted sectors. Focusing on the ETF DIA, on the 10-year, Morningstar gives it a 5-star review out of 820 funds. The efficiency is 97, tradability 99, which means that it's easy to day trade this if you wanted to. Now, in my eyes, I'm buying this long term and holding because I'm going off of past history. And although you can't rely on past performance for results, I like that this has been proving itself for over 20 years. Now, taking you back to my channel, Trading Simplified. If you liked it, please subscribe. Please leave a comment. Always appreciated. Press that like button. It helps out the channel. And check out all my playlists. I have plenty of videos for anybody. I have my crypto portfolio. I have day trading, trading strategies, long-term investments, and my current positions that I'm holding.